112 points. The mid-cap index is up almost 1%. So that relief rally is definitely playing out. Cannot assure the lack of volatility. I mean, at any point in time through the course of the day, perhaps selling pressure could come through. But for now, the bulls have control of the market. But the auto sector globally could be headed for another semiconductor shortage, which will be the third supply chain issue in the last 3 years. Auto ancillary companies like Sona Comstar have almost a 25% revenue that comes in from the European markets. And could they be hit by the semiconductor shortage? We find out. Sunjay Kapur, the chairman at Sona Comstar, also the president of the Automotive Component Manufacturers Association of India, joins us now to talk about that. Sanjay, thanks so much for joining in. We were speaking with the management of Endurance yesterday, and they said that the situation in Europe is quite grim. In any case, higher gas prices had caused cost escalation, and now the Russia-Ukraine crisis is threatening another major semiconductor shortage. Your own views on what's happening there and the impact that it would have on businesses like yours?
Thanks, Sonia. Morning, and we are facing a semiconductor shortage as we have been, in the past year. Given the fact that we are in a difficult situation in Europe or in Ukraine and Russia, we may see some, delays in building up capacity in terms of what we had thought we would, specifically for the European market. However, the flip side to that is that supply that was supposed to go to Russia could come to India, so we could see some benefits from that. However, it's a little too soon to say what the fallout could be, depending on how long the problem persists and how long it lasts and how quickly we can recover. However, I must say that this is again a cyclical change and not a structural change. So there is hope going forward, because again, demand exists, as it has before. Demand continues to exist, and as this is just a cyclical change and not a structural change in that, we hope that we will overcome this sooner than later.
The problem is that even before this Russia-Ukraine crisis, that whole pocket was under a lot of pressure. I mean, I was going through your last presentation at Sona Comstar, and you said that revenues in the non-electric vehicle side fell 22% from your largest markets, which is North America and Europe. That's a steep fall year on year. What could be the incremental fall, say, in Q4 of this year and in FY23?
So I feel, from a ICE versus EV perspective, I feel the EV sales are increasing globally. And I mean that in terms of the way the markets are panning out, in terms of more demand for electric vehicles in Europe, as well as China and North America. And I feel that will definitely impact ICE sales. However, because of the increase in EV sales, we'll be able to keep sales pretty much at the level that they are, in terms of meet our expected targets.
Mr. Kapur, the other thing which of course we've been trying to quiz all companies on the show is what's the impact of the overall rise in commodity costs? Everything is through the roof. Can you tell us, for your product portfolio, what are you seeing so far?
Currently, we have a pass-through when it comes to commodity prices, so we're okay. I don't know how this will go, going forward. I don't know what will happen going forward. It's too soon to say at this point in time. However, currently, most companies do have a pass-through when it comes to commodity prices to the customer.
Okay, but in your quarter gone by, your margins had fallen, right? It fell to about 26%. You used to enjoy 30% margin same time last year. You see more pressure despite the pass-through?
Well, this has also been due to foreign exchange, and so we don't see a lot of pressure going forward. We will maintain our margins in terms of what they are.
You'll maintain your margins, all right, got that. The only thing in your control at the moment would be bringing down your own costs, right? Because everything else is sort of all over the place because of the situation at hand. Any cost-cutting strategies that you could deploy, perhaps, that will help you hold margins at these levels?
So as an industry, we're pretty used to this sort of fluctuation. We've been working on cost competitiveness, on building efficiencies in our business. We've seen the COVID wave 1, wave 2, wave, almost wave 3. So, we've been through that, and we're a resilient industry. And, we continue to cut costs, and we continue to maintain costs at a level where we can maintain our margins. So we're pretty accustomed to this. and we'll continue to maintain, our profits by cutting costs where we need to, building efficiencies in the system, in process engineering, and in operating efficiencies.
Okay, got that. Supply side issues are one thing. Of course, that's something that the entire industry will face. But is there also a demand crunch that you're seeing, which generally crops up in war-like situations? Also, now you have a lot of automakers that have shut down their plants in Russia as well as in Ukraine. What do you see as the impact on demand because of all of this?
So at the moment, we're not seeing any impact in demand. We're still seeing strong demand across sectors, across passenger car, across commercial vehicles. We're seeing strong demand. Again, it's a supply issue more than a demand issue.
Mr. Kapur, just to sort of come back and circle back on that point on cost, you said it's complete pass-through for you and others as well. But have you heard back from your customers at all? Because, I mean, the rises have been not normal rises, right? 3-day prices doubling in some commodities. They can show cool off as well. But any idea how this will work, or you'll just have to wait it out and watch?
I think we're going to have to wait out and watch because, again, we haven't heard back from customers. Schedules haven't changed drastically. So, we're hopeful that things will settle down. We're hopeful that, the problems will end. And again, this is a cyclical problem, not a structural problem. So we're hopeful that things will settle down sooner than later.
Okay. What is the situation back home in India? I mean, you get 25% of your revenues from the Indian market, and within that, almost 70% comes from the passenger vehicle market itself. Over there, prices are going up, third-party insurance premium is going higher. Now, fuel prices will begin to rise as well post the elections. Do you think all of this will hamper demand further? And how is the sentiment at the moment?
Well, at the moment, the supply side is not able to keep up with demand. So even if demand were to come down, we'll still have enough to supply. So if you look at the fact that, we've been struggling with supply side because of changes, because of problems with the headwinds we've had with raw material, with the semiconductor industry, etc. Even if demand were to come down, which I don't see it coming down, and I'm not seeing any major schedule changes due to demand, we will be able to meet the demand, in terms of the numbers.
Okay. And can you tell us a little bit about the order book? As at the end of Q3, it was around 17,600 crores, which was the total order book, the net order book that you saw. Since then, has the order book gone up, both in the electric vehicle as well as non-electric, the ICE engine side?
No, our order book remains at 17,600 crores with a 66% EV revenue.
Okay, all right. Just one final question on, the situation at hand. Given that there could be some further pressures as far as both the semiconductor shortage is concerned as well as the demand situation, by the end of this fiscal, where do you see your revenues? I mean, are you looking at a growth, or do you think that there could be, it could be similar to last year? Are you looking at stagnation of growth? And also on the margin side, any more pressures that could perhaps take your margins lower than this band that you've been operating in?
So, Sonia, we don't really give future guidance, so I won't be able to comment on that.
All right, Sanjay, we'll leave it at that. Thanks a lot for joining us and appreciate your thoughts on the channel. Well, that's the word coming in from Sona Comstar. There are definitely challenges and some delays perhaps in building capacities, but they're trying their best to hold on to margins at current levels. Their margins had fallen from 30% last year to about 26%. They hope that they will not have to see more pressure there. Let's slip into a short break. Up next, we'll connect with Ramesh Kumar Dua, the MD at Relaxo.